Has it ever happened to you that you saw a breakout on the chart that looked absolutely textbook perfect? Resistance broken, green candle formed, indicators worldwide flashing buy signals. And the moment you deployed your hard-earned life savings into a trade, the market took a blood-curdling dive in the blink of an eye, wiping out your stop loss and emptying your account. Hand on heart, this is a daily story. You think you are wrong, that your strategy is flawed, but the truth is far more terrifying. You are not being made a fool of, you are being systematically hunted. Market algorithms, large institutions, and smart money deliberately trigger your greed and fear. This is called inducement. They know where you will buy, they know where you will place your stop loss, and they use your own tail to push you into a chasm where your money goes straight into their pockets. Now hear the bitter truth. The price you trade by is not real. It is a mask, a trap set up by operators every single morning to snare you. Real power, real money, and the real truth are hidden in volume. This script offers no inspiration, no motivation, or overnight wealth pills. Here we speak of the naked and terrifying truth that drives 90% of traders to the streets. If you want to save your money and defeat smart money at their own game, engrave every single second of this into a corner of your mind. Before you take your next trade, this script will open your eyes forever. Now open your eyes and look at the lie you blindly trust: price action. The novice trader always stares solely at the bouncing and jumping of prices on the screen. He sees a green candle, hope stirs in his heart, and he throws in his hard-earned money. But have you ever seen the monster standing behind that price, deciding how long that candle will grow? Price is merely a facade, an illusion that smart money, meaning large institutions, wears every second to fool retail investors. Understand this through a chilling example. Suppose during the US market session, a popular NASDAQ stock suddenly surges 5% upward. Retail traders worldwide treat this as a historic breakout and blindly build long positions, thinking the stock will touch the sky. But if you look at the volume bars at that exact moment, you will see a terrifying truth. That 5% violent surge happened on almost zero volume. What does this mean? It clearly means there are no real buyers present there. It is merely an artificial trap woven by algorithms to trap naive traders like you at high prices, while smart money sheds its old inventory. Conversely, when the market is sluggish within a range and price refuses to budge, the average trader gets bored and falls asleep. Yet during that same quiet and boring time, volume shatters all previous records, meaning crores of shares are changing hands behind the scenes. This is proof that smart money is lurking like a bloodthirsty predator, taking your stop losses into its possession. Price will deceive you every second, leading you precisely where operators want you to see, but volume never lies, exposing the dark truth unfolding behind the curtain. Now open the doors of your mind completely and understand the greatest and most eternal rule of financial markets: Wyckoff's mental model of effort versus result. Without understanding this model, taking even a single step forward in the market guarantees you will get chopped up. Here, effort directly refers to the heavy volume deployed by institutions, and result refers to the candle spread or price movement. In a healthy, natural, and honest market, the rule is simple. Massive effort always produces a wide price spread. If a huge amount of money is deployed, price must rush forward at high speed. However, when manipulation or inducement is running rampant in the market, a terrifying divergence arises between effort and result. Imagine a candle forming on the chart bearing the heaviest volume recorded yet, meaning billions of dollars are thrown in. The average person thinks a storm is coming, but behold the miracle. Despite all this, the price does not budge an inch, dying right there as a tiny doji candle. Imprint this horrifying imbalance deep into your mind and heart. If price refuses to move even an inch despite such fathomless money being deployed, what does it mean? It means a massive, invisible, and ruthless force is standing in exact opposition to that candle, completely absorbing all that effort. The market tries desperately to move upward, but smart money stands ready at upper resistance, with countless selling walls blocking the price from advancing. When you begin to witness this mental model with your own eyes, you will clearly see how operators present false effort while keeping the results in their own pockets. Now is the time to recognize the 3 lethal volume patterns that suck your blood on your trading charts every single day. If you do not know them, you will serve as the sacrificial lamb every time. The first pattern is buying Climax. The market has been rocketing upward for days. Everyone on social media is celebrating, and your FOMO, fear of missing out, reaches its peak. You thoughtlessly throw your entire capital into a buy trade. On the chart, you see a very long green candle accompanied by record-breaking volume. You think the party has started, but trust me, this is the night of doom. This is a buying climax, meaning smart money is dumping all its shares onto the heads of greedy and frightened retailers like yourselves while quietly exiting with massive profits. Right after this, the market unleashes a bloodbath that cleans out your account. The second pattern is stopping volume. Chaos surrounds the market everywhere. Stocks are crashing rapidly, and every trader is panicking to book losses. But suddenly, amidst that horrific drop, a candle forms at the lower end featuring heavy volume unseen in days, brutally rejecting lower prices. This is the naked truth that smart money is aggressively absorbing the shares you sold in panic at dirt cheap prices. This is the silent turning point where market destruction stops and a new game begins. The third and most dangerous pattern is volume divergence. The stock makes a new high, your screen is green, and you are happy. But look closely at the volume bars below. With every new high, volume continues to decline. Price climbs higher, but volume dies out at the bottom. This classic divergence is open testimony that the rising move lacks fuel or momentum. This is the most cunning trap of inducement, where operators offer false assurance that the trend is strong, only to crash the market in a single sweep the moment you leap in with full force. Everything you have seen and felt in this video so far is not merely knowledge, it is the ultimate weapon for your trading career. The question is, how do you take an infallible, perfect entry by understanding this terrifying truth and the power of volume? Remember, volume analysis is not some magical spell guaranteeing 100% accurate results. It is a high probability game where you must become the hunter, not the hunted. A perfect entry is born when the exposure of inducement and volume climax collide with one another. Imprint this live execution case study in your mind. Suppose during the early hours of the US market, a prime stock breaks a strong support level and suddenly drops a candle downward. All breakout traders worldwide who look only at price go wild with joy, establishing short, sell positions, thinking the market is doomed. This is the exact moment smart money lures them in with inducement bait. Yet the moment that breakdown happens, your eyes must lock onto volume. You notice massive buying volume has suddenly surged at that lower fake breakdown level, and the price snaps back inside the support zone within a single second. In technical terms, this is called a spring or false breakdown. Your perfect entry will occur immediately after this fake breakdown, upon the close of the candle carrying the most dangerous volume. Your stop loss will be fixed safely below that heavy volume candle or swing low that no force can shake, and your target will be the next primary resistance zone. This disciplined risk-to-reward ratio pulls you out of the ordinary retail trader category and places you directly alongside professional institutional traders. Now close your charts, watch this video again, and swear that the next time you take a trade, you will not rely on the deception of price, but will rest your finger on the buy or sell button only after reading this naked truth of volume. Wait, before you leave, engrave that single truth into your consciousness, which, after closing this video, will decide whether you remain profitable tomorrow or empty your account once more. The financial market is no charity house. It is a battlefield where your lack of knowledge and habit of watching price alone drive your greatest losses. If you want algorithms and smart money's inducement trap to never affect you again, watch this video at least twice more, start reading volume with naked eyes on your charts, and forge your trading psychology like iron. If this serious, unfiltered analysis has truly opened your eyes, prove your commitment by hitting the like button below this video. To catch more terrifying truths and institutional secrets first, subscribe to this channel right now and press the bell icon so you never fall into a trap again. And most importantly, tell us honestly in the comments section below which stock's inducement ate your stop loss last time, and whether you will use volume as your weapon starting today. Every single comment will be answered. Manage your risk, stay disciplined, and see you in the next explosive session.